And people are asking, so when do you sell that IPO? Very, very simple answer that I could give you is this. When the reason why you bought that IPO or you bought that company is no longer there, then maybe it's a good time already to take profits. So hey guys, so in this video, I want to talk about IPOs because there have been a lot of money raising that has been going on lately, even in the Philippine stock market. And please do note also that given where we are still at the tail end of this pandemic. We're still not out of the woods yet, and there's a lot going on. Also from a global landscape, there's a lot going on. Globally, there's fears of a recession. In the US, inflation is high there. They started to raise interest rates and we're seeing lots of downward volatility in the US market. But that being said, please do remember this, that when it comes to businesses or when it comes to corporations, the name of the game still for corporations and businesses is to make money. The name of the game is to actually expand or build a base or give as much value to customers. And part and parcel for them to be able to do that is they actually need capital for them to be able to fulfill it. And one of the ways that they can fulfill that, or one of the ways that they could raise capital, is by borrowing or bonds. And the thing about borrowing is that you can only borrow also at a certain point because no one wants to lend more money to a company that has a lot of debt. That being said, there is a good balance between the amount of money that companies can borrow versus also them raising money via equity or selling bits and pieces of their shares. And that's what they're actually doing when they start selling their shares in the stock market. I've been investing for over a decade now, and what I've seen from companies that have raised money that have done really, really well, not just from a business perspective, but you've also seen it in terms of how the stock has moved over a period of time. When I say over a period of time, please do note that there are times that you would see it go up, you would see IPOs go up, only to see it also crash, correct, and have a hard time to actually go back to its highest point or goes or it even falls close to its IPO price or even lower than that. When I say has done very, very well, after initial movements up, we have seen sustained growth in terms of its price, that it does not even fall lower than its actual IPO price, that we're not just actually seeing earnings come in, we're not just actually seeing growth and expansion, but we're also seeing it reflect in the stock price. And from what I've noticed from companies that have listed in the stock market, I can't stop saying this over and over, I can't stress this enough. One of the biggest things that's important is where the proceeds of the money go and how they actually use it and how they actually execute on whatever plans that they actually have. Because every time you also read up on prospectus or any disclosures that they would have, they would lay out whatever plans that corporations would normally lay out, whatever plans that they have for the company. They would lay out what their ambitions are, what they want to happen, what they want to build, which is all good because no executive, no board of directors, no leadership wants their company to fail. But as you all know, in business, there's competition. There are a lot of things happening also in the economy. There are a lot happening in a sectoral level. There are a lot happening also in the macro that could possibly affect their business as well. And the reason why I say that is it's not just about drawing or creating a good plan, but how they have executed on top of that plan. So I keep saying it, look for where the money's going, what they're actually doing with the growth, but I want you to also see how have they executed on it. And case in point, what's very interesting, and I say this all the time for people who have been inviting me to do keynote talk in their corporations and businesses, I would always give Pure Gold as a template. A very, very good example of a company that has IPO'd more than a decade ago. That was a pure expansion play. If you notice it also, especially in Metro Manila, if you go to different parts of the city, you go to different parts of the metro, you would see Pure Gold stores, generally very, very good locations. And that wasn't the case 15 years ago. That wasn't the case more than a decade ago. When they got their IPO funding, it allowed them not just to build a very, very good brand, but it allowed them to position themselves to grow and expand and to be in different parts of the metro. So they had a plan to grow, number of stores that they wanted to build, but they executed on that very, very well. And it has translated to them being one of the largest supermarket chains that we have in the country. What allows them to execute at that level is the leadership behind the company. What's their track record? How good are they also at retaining talent? A company will only be as good in terms of delivering the numbers that shareholders want if the company culture is there. People around them really like staying in the company. If they get to retain the top talent, if they get to retain great talent that will elevate the company forward, then it will translate also in the numbers. So looking at the leaders, looking at the executive team, looking at the committee in charge of making decisions, those are things that are not really quantifiable specifically by numbers, because when you look at it from a quantitative fundamental analysis standpoint, it's easy to look at PE ratios, EPSs, dividend yield ratios, price to book ratios. There are numbers that you can quantify, but what allows those numbers to actually happen, what allows those numbers to work, are the people behind the company, lower management, upper management, middle management, that bring whatever is in the prospectus to come to pass. But please do note also, every time that a company that has a good brand is listing, there will always be a premium attached to it. A brand reflects people's sentiment. The better the brand, the higher the premium. So please make sure that you're not just buying it just because of the brand that's attached to it. Although I'm a big fan of companies with amazing brands, because I really believe that in business, brand is everything. However, please make sure that whatever is in the brand translates to how the business would be. Please do remember this, and this is what people fail to add up when they're also investing in IPOs. You do not benefit from whatever success the company had in the past, whatever they've built up for the past 10, 15, 20, 25 years. When you start to come in to become a shareholder of the company, you won't benefit from any of that. You will only benefit from what they will be and what they will become in the years to come. So it's highly important that you actually see that if I come in at this point, it's of course at a higher valuation as compared to the ones who started it. But of course also, what's interesting about companies that are listing is that since they have been there for quite some time already, the risk versus investing into a startup versus investing into a company that's just getting in there, or a crypto project, there's a bigger chance that crypto projects could possibly drop massively or even go to zero. There's a bigger chance that a startup could not really go anywhere. But if it's a listed company, especially in the Philippines, there are bigger safeguards also that they may underperform in how they move in terms of their stock price, but there's a bigger chance that they won't go to zero as compared to a startup, as compared to your friends company or business that they would ask money actually from you. So just look at it from that perspective. Every time you look at IPOs, always look at it from a perspective of where the money's going, how the leadership is using the money, and how are they executing on that, and what they're doing with the culture around the company to make it better, to make it good, to actually fulfill the promises that's there. And if there's a great brand attached to it, that's even better. But don't just fall in love with the brand, fall in love with the company. And I guess I'll end it with this. If you want to be an investor in the stock market, and it's totally different perspective from being a trader, you have to fall in love with the company that you're buying. For a trader, of course, I'd always say this for all the smart stocks that I give. You don't fall in love with the stock, you just look at it as a trade. But as an investor, you look at the company and you have to fall in love with the company, that if you've done your research, you've done your due diligence, and you see it that this is something worth getting into, no matter what other people tell you, you know you've done your due diligence, you've studied it well, and you fall in love with it. Think about love life. Think about the person that you love the most. Your friends could dissuade you to not go for that person, but because you know it's something that's right, you know that you've done your due diligence also, you still pursue it. And that's what I suggest how you look at IPOs also. And people are asking, so when do you sell that IPO? Very, very simple answer that I could give you is this: when the reason why you bought that IPO or you bought that company is no longer there, then maybe it's a good time already to take profits. When the fundamental underlying narrative on why you wanted to position in it, put a large chunk of money in it, and go for the long term with it is no longer there, and that's the time you actually start selling. That's the time you actually profits. And that's the time also you have to do your research on where you're gonna put it. Is it just gonna be cash, or are you gonna move it into another company that you know you could have better upside on? If you want to know more about stocks, I've written 5 books. It's called the Stock Smart series. They're available in Shopee and Lazada. Check it out down below. If you want to know about fundamental and technical analysis, I have online courses that I've created that's on demand that you can watch wherever you are in the world. Links are in the description below also. And if you want to invest in crypto, or even you want to buy your own hardware wallet, or if you want to also invest in US stocks, everything is down in the description below. So if you guys have any questions, feel free to put it down below, and I'll do my best to be able to answer you to the best of my ability and my knowledge. I guess that's it for now. Marvin Germo. I hope this video helps you trade well, trade strong, trade smart. See you all again soon, and God bless you all.